Afternoon, everyone. Doc Severson here, along with Dave Lukas of 12 Minute Trading. Today is Monday, the 6th of January, and we have a nice little rally on our hands. Now, we're going to talk about this a little bit more because the rally was really up a long way and then started to get a little bit soft here as we've gotten into the last hour and a half of the market for today. So, anyway, I mean, the one thing that we can look at is that we've made a pretty significant bounce and a recovery off of a double bottom undercut. So I'll talk about that in a minute, of what a double bottom undercut is. But I think there's a bigger pattern playing into play right now, which is also something that we'll discuss. And to give you a little bit of framework about what is happening in the markets right now, we are closing in on the inauguration in a couple of weeks or so. You know, is that going to be a market moving event? I don't know. I'm going to throw it over to Dave for his view on the fundamentals right now, though.
Yeah, so we're not out of the woods yet, right? I think Friday was obviously a really good start. Today, I'd like to see this market climb back up, not to the maybe the highs of the day, but show some strength into close. Fundamentally, we haven't like things haven't changed
Yeah.
much, right? I mean, fundamentally, we're still in a bull uptrend, right? Weekly chart, daily chart. This looks like the beginning of a daily chart release. Doc will show you that on the charts in a minute, but really we've gone nowhere for the period of what, 10 days or so. That's really it's just a move like this, right? So, fundamentally overall, things are looking pretty good. Earnings don't start till later in this quarter, so there's nothing around earnings. The reason the market really went skyrocketing higher to start the day is a rumor came out that Trump was not going to be as aggressive with his tariffs. And then just before open, he said that rumor is not true. It was reported like in the Washington Post or something. But the market's still up, right? And so again, that kind of shows that we could be continuing this trend higher as a reversal off your double bottom undercut that you're going to show. I think there's some key levels that we've got to get above, right? On the Russell, it's 2,300. On the S&P, it's 6,000. On the NDX, or it's what I follow for the NASDAQ. Got to get back above about 21,800. So we're still not there yet. That's why I say we're not in the woods, but certainly we seem to have a change. We could be coming out of the corrective pattern, could be seeing some upside over the next few weeks. Remember, a couple things else. I'll let you go, Doc. Uh, we have jobs report this Friday, right? So that's market. We were no trading on Thursday. Markets are closed. We've got Fed minutes that come out on Wednesday. Now, I'm interested to see if those play a bigger role this time around because the Fed turned hawkish kind of unexpectedly, right? So look for those to potentially be something that moves markets on Wednesday. And then obviously Friday jobs report. But then we get into next week, and next week starts to deal with the treasury issues, potential debt ceiling type stuff and everything, right? So there's still a chance for volatility, but I think if we see those levels, taken out by the end of the week and we continue above there, and we see this energy continue to go down the daily chart, we're clearly in a weekly or a daily swing, and then we need to watch the weekly swing. We'll talk about that when we get in the chart. So,
Yeah.
Doc,
Well,
leave it over to you.
Dave, before I let you go, can you give us your opinion on how you see today's news from Canada playing out, and if there's any synergies or any kind of synergistic growth that we could expect between Canada and the United States if they loosen things up a little bit.
Well, I think a lot of people around Canada are rejoicing, right? After that, there's you look at the popularity, the sentiment, and everything in Canada around Trudeau, whether you like it or not. They did not overall as a country approve of him very much of a leader. And so it's really going to come down to who takes over, right? Does another Trudeau take over? If that happens, I don't think any changes. But if some of the more pro-growth, type candidates and stuff take over and are going to work with Trump and all that stuff in a bigger way, that could cause something in the markets, right? Right now, I'd be watching the Canadian stock exchange more than ours. I don't think it impacts ours that much. Unless Canada becomes the 51st state,
Now,
which has been.
is there, and again, I hate to bring this up because I don't know enough
Yeah.
about this. Is there going to be a general election if he steps down, or is he going to be replaced by somebody else in the
I
Labor
think
Party?
there's an election with how they do it because it's more of a parliamentary system, right? So it's, there's going to be candidates nominated, and both sides have to vote for them. And I want to say that his party's lost some power, right? So it's different than the United States. It's not clean and cut and dry. There's going to be a lot of back and forth, horse trading, different parties going for the candidates and stuff. So I know. I think it's Pierre Polivar, or I'm probably not saying his name
Pierre
right.
Polyev.
Um, yeah, yeah. He seems to be the leading candidate with a lot of momentum, and he's definitely more on the uh, pro growth side and everything and stuff. And so I think he's kind of the guy that they're looking to. So I again, that's one that if he got in, I think you'd see that some impact here. I think you'd see some positivity here because of just he's a lot like Trump. So, but too early to tell yet. We'll just have to see how their whole parliamentary system shakes out, you
Well,
know.
they're going to shut the parliament down until March, if you can believe it. So they're
Yeah.
just going to shut everything down. And then
Yep.
I had heard that there was going to be an election in October, but I wasn't sure if they were going to just install somebody into there
Yeah,
for
no,
the
they
time
probably go
being.
through an election process and everything. Again, somebody, would have somebody probably knows more than we do. Have to look it up, but
Yeah.
I just don't pay attention that much. But look at France, like France has an election. The person that gets elected, they don't like, so they have another election. Like I don't know if it's like that or not. It's just, the parliamentary systems are pretty wild in how they
Yeah,
do
the
stuff.
British are funny because they basically just say vote of no confidence, and so
Yeah.
they give it to one party or the other to like form a government, and so
Right.
ours is actually much more structured than theirs. All
Yeah.
right, well, all right, enough of that. I know Polyev is going to get in. I've been following this guy for the last year or so like that, and I think
Mhm.
he's got so much momentum right now, and this is why
Yeah.
Trudeau's crumbling because
Yeah.
he's under some withering fire right now, and he's backing out of it. So anyway,
Right.
let's go over to the charts for a second here, and let me. First thing I want to say is, here we go. The first definition is what is a double bottom undercut. So when you look at the charts, so here we were coming off of the highs, and we established the first low. We bounced like crazy, and then came the Friday surprise after Christmas, where it's like, hello. But notice what happened here is that just when we got into the point of maximum negativity down here, I'll draw, a sad face down here. Um, we just barely undercut the previous low, and then exploded off of there. So we had a good strong close that first day, real strong close on Friday, and then here we are today. Now, you'll also notice that we have this trend line here, and that's a lower high. So we may be just sort of stuck in this pattern. The bears came along and sold this thing pretty hard today, and we still have an hour and 20 minutes to go, but I'm not sure if we're going to be back up there or not. So we could actually be trading within what is a longer term triangle, believe it or not. So even though we don't necessarily need to see something like this because the energies say, hey, I'm ready to go. And the monthly chart is a little bit diminished. And if we go out to the 14 period, it's actually way down here. But I'm thinking that we're on a different schedule right now. So what I'm thinking is, guys, you have to ask yourself at any given time, like, what would have to happen in the market to screw the greatest number of people? And that's the way that markets work, is that they exist. And the reason why that happens is because people take action based on their own self-interest. So if something happens that they don't expect, they will take immediate action, and that's usually a panicked reaction from that. So in this case, what may happen, first of all, everybody I think is expecting this to break out. And when everybody expects something to go in a certain direction, quite often it will go in the opposite direction from there. So, what I'm suggesting is that we may just kind of wander around in this area. Maybe we have a reaction on Friday. Maybe the jobs report comes in a little bit hot, and oh no, there goes the rate cuts for the year, and the market
Mhm.
will react to that negatively and maybe replumb the lows down here. So we may sit in a pattern like this, but the overall pattern is everybody's expecting this with the trend that we have to go higher. And what everybody's expecting that quite often what I've seen in the past, and this I said this exact same thing about this pattern back here. Everybody was expecting it to break higher. It broke lower based on the Fed. So wouldn't it be wild to see something like this happen where we actually drop out of the pattern violently? And I believe what that would set up overall. So if it dropped out of the pattern like this violently, I think this would set up probably the very last swing in this entire pattern. I think we could do the finishing pattern here. And then, this is where I think we're going to be out of energy across the board. So this is what I'm seeing right now. And again, I'm not predicting the future. I'm not saying this is what's going to happen. All I'm saying is that when I've seen patterns like this before, and in conjunction with the general bullishness that's out there in the market and the general optimism, and everybody wants things to go, the market will typically disappoint the greatest number of people. And that is by dropping out of this pattern. And then just when we get to be super bearish down here, I think this is where we are going to explode. And actually, this is the same pattern I remember from 2011 happened the same way. So today's a little bit of a shooting star at the top of a pretty good move here. So that by itself doesn't mean anything. But if we have a little bit more follow through to the downside, then that means that we're just setting up a pattern longer out.
Yeah, I'd really like to see this thing gain some strength in the close. That's what you want to see today. Maybe not all the way back there, but gain some strength in the close. We still like look at that level there. We have to take out that kind of lower high, if you will, that's on the charts. And that's why I'm saying 6,000. We got up there today, but you got to hold it and you got to stay above it. But looking at the just price action, what have we done? We talk about this a lot, guys, right? So hit the lower Bollinger Band, right? Got there alongside it for a little bit, bounced back off of it. The energies charged back up during that time and then started to release, right? So we could be just in a small daily release that heads back up, maybe takes out that previous, lower high, but doesn't take out the former real high, right? That 6,099 level, right? That's, if you really want to see this thing get cranking, right? You got to take out that level and then start putting in lower, higher lows and higher highs, higher lows, higher highs. So that's why I said we're just not out of the woods yet. We just are kind of walking sideways. This is all one big sideways pattern. In fact, pull up the weekly chart, because that's what it is on there. It's just a sideways pattern that's just sitting out there right now, waiting for to tell us which way it wants to go.
I mean, this would actually be
Yeah.
perfect if it breaks below that center moving average and then drops down to the lower Bollinger Band.
That would be
again.
like your undercut. Yeah, that would be like your undercut. I just don't know if I don't know if we're gonna see that. Again, it'll all depend on some of the things coming up, right? But like one of the big things was like Speaker of the House last week. That seemed to get through without very much issue. They're already working on the things for Trump and the bills and all that type of stuff. So there doesn't seem to be anything that is uh, causing what the market's been investing in ahead of time to change. So again, back to the fundamentals. So you would need some news. Something would have to come out that really, shook things up. And maybe you're right. Maybe it's some crazy jobs number that you think the Fed's going to raise rates. I think I saw today there's now a 40% chance that the Fed's going to raise rates this year. Now, so That's crept up. So yeah, we'll just have to see. That's why I'm saying we're just kind of not out of the woods yet. I'm dabbling in a little bit of trades, keeping positions a little bit smaller. Got a nice start to the year, making some money, but I really want to see this thing resolve itself in earnest and watch really this weekly trend kick off. That's for me. I want to see this weekly trend. You can see the energy all charged up, ready to go. Whichever way that starts to go is going to be a huge opportunity to start the year.
So
So.
this is the 10-year note. Is that a bullish or is that a bearish looking chart?
Yeah, that's the thing it's definitely price is going up here, right? That's on the monthly. Let's look at the daily and the weekly though.
Well, I mean, this is my point though. This is setting the tone on everything. This is a
Yeah.
bull flag on the 10-year note. And
Yeah, but
so
if the 10-year price goes up, that means rates are coming down.
no,
That's a
no,
flag right there.
this is the yield. This is the yield
Oh,
on this.
sorry, the yield's heading up.
So
Sorry.
right now, I mean,
Yeah, the
you look
yield
at
keeps
this.
going up, stocks are going to take it on the chin.
Well, in to some degree, but what we find is that it's where stocks have a problem with this. It's okay if they have localized movements like this. It's okay because like during the back half of 2023, what do we have? We have an awesome rally in the equities market, and at the same time, we had rates going higher. But where we don't want to see it is when rates do something like this, move from 1.5 up to 4.5%
Mhm.
in the course of a year. And this is why we had so many problems in 2022. So this generally is pointing north right now, and that is
Yeah.
yield. So yeah, you got a point there. Let's see, was there
I think
something else?
that obviously the magic number here is 5%. If the 10-year gets to 5%, that is almost like it's like a hot pot. It's like touching the
Third,
hot stove for the markets. That
it's
is
the third rail. Yeah.
that is the big level. But guys, it's all going to depend on how this Congress starts to get fiscally responsible. If we keep spending at a clip like we're spending, I don't see rates coming down. I think you could see 8 to 10% mortgage rates. And that's going to do something, eventually it's going to lead to pain, right? To unwind all this basically debt spending, that's what you see in the markets. I mean, we showed this before, but just real quick, Doc, pull up the SPX chart, just put like a 10 or 20-year monthly chart up real quick. Because, like, uh, I'll show you, this isn't natural. And I know you do a log on it too, but look at the steepness, really starting in 2020 and what this thing has done. Now, if you were to draw a trend line from back in '09, right, for the trajectory of the markets, right, where would that be? Yeah, log will change it some.
Yeah, I mean
So,
the log chart looks perfect, and this is the same thing that we
yeah,
have to do with Bitcoin because just due to the debasement of the currency. So
exactly.
if you look at anything on this, if we're not debasing the currency, then uh, let's see, price
But a
access.
reversion, a reversion kind of to the mean here is probably in that 5,000 range if it wanted to revert to it, right? And that would be about a 20% correction, to come back in the pattern if you were to draw a trend line on this chart here. And again, if you look at this, doing that would still be a higher low on this thing,
Yeah,
you know?
as was the 2022 bear market.
Yeah,
Everything is relative. What felt like the worst thing in the world going on at that
yeah,
point, which was the 2022 bear market, on the monthly chart is nothing more than another higher low.
right.
And even this correction that we had back in August is nothing more than another higher low that we
So
have. So
as steep as this is, guys, I wouldn't be surprised to see a correction like that to put it another higher low. It would be a 20%er, right? And because of all this debt spending and everything that we've had, if we start to get our house in order in that sense, that takes away some of that punch bowl. So it'd be natural to see that rates would go
right.
up some, and stay up elevated. And that's kind of why we've been saying, like I've been saying since July, 2025 is going to be an interesting year because of this potential. And so if you get fiscally responsible, that means some of that punch bowl has to go away, and that's going to give markets a little bit of a fit for a while. But overall, the trend is up long term because the currency continues to lose value. So you made a good point on that. So I just want to point that out, just perspective, guys. Like, corrections aren't a bad thing, especially in our case if we're getting that fiscal house in order.
Having a nice day on Bitcoin here for those of you that are playing around with that. This is the IBIT, and 57 is approximately the $100,000 mark. So we're breaking above 100,000. Now we did get a question that came in from Jungle Cat. Have you noticed that SPX double calendars have stopped working well since the election? Well, I don't think you have to qualify it as double calendars. Even single calendars have stopped working since the election. And so basically, if you think about a calendar spread, which looks something like this, really what you're doing is you're selling. So we'll just say sell short term, and then you're buying long term. Now think about this from a volatility perspective. So what you want to see is when you're selling your short term, you want to see that implied volatility high when you sell it and then eventually tail off during the duration of the trade. Now, can we generally see that? No, not often, because things will basically be up and down like that almost on a daily basis. But as far as the longer term, and the other thing too is that this has a smaller vega. So it's not as sensitive to changes in implied volatility. However, your longer term option, especially depending on how far out you get this, can have enormous changes in volatility. And if you think about this, this is where, depending on whether certainty or uncertainty are coming to the market, this will make enormous changes in this. And so I have not been trading campaign diagonals since probably the second week. I think it's like the second week in December when we were in that consolidation. And it just doesn't seem to make sense right now, because especially when you're in corrective behavior like this, like we're still in corrective behavior on the S&P, right? So if we go out here, this is still corrective. And days like this will just completely blow apart, even the bounces off of here. So think about it this way. When you see markets like this, range contraction like this is getting ready. You're winding the spring up to where you're going to see a big move one way or the other. And so this is where I will back out of this, because these don't last for very long. If you look at something like this, these don't last for very long until you get a big move, and you don't want to be in time spreads of any type when you get into movement like that. They don't react well to it. So you're either getting volatility crush on the long option, or you're getting destroyed on the short option, as the implied volatility and the delta scale on there just screws with you. So you gotta be really picky about picking areas of price action where you're likely to get, even something like this is reasonable. Even though it's trending, you can walk with these, you can roll these out, and it doesn't make big changes in implied volatility. But it's that back option that really is destroying things. And so I need to wait until we get into what's called quiet and trending again. This type of character is sideways and volatile, and it is death on a time spread right now. It is horrible to manage those in a time spread. So I don't know what everybody else is saying in the options trading space. I usually stay away from that type of stuff, because what I find is that I find that if you read too many opinions on things, it will color your thinking, and then you lose your objectivity. So Hopefully that makes sense. If there's any other questions, we're going to be here for about another 5 minutes, guys. So let us know if there's anything you want us to talk about.
Yeah, the biggest challenge now is waiting for this market to tell us which way it's really going to go and trend. The next big trend. That weekly chart is again coiling up. And guys, a
Mm-hmm.
weekly chart move can go for 8, 10, 12, even 15 weeks. Like the better part of this quarter is going to be based on where that weekly chart goes. The hardest thing for any trader is to have that patience to let the market show you the direction and then take advantage of it. And it happens, I'm guilty of it, slapping a trade on because I got money sitting there and I'm anxious to put it to work. And, then all of a sudden, because I didn't have as good of an edge, I get run over and I got to manage it and I got to do all this stuff, right? And so, that's something that, I've gotten better at over the years. Something I'm really concentrating on this year is not to trade and just to, have the setups, be patient, wait for it to happen, take full advantage, put that money to work. I'm still mostly in cash at this point in time. Went to cash before I left last year and, dabbled, like I said, a little bit, but, I've probably got 80% of my capital plus on the sidelines right now. And so I think that's for me. It's when this weekly goes. Make sure you attend these each and every week because when this weekly goes, we're gonna have a lot of fun and we're gonna do show you a lot of the ways we're taking advantage of it.
What would be my signal the calendars will
Mm.
start working again? That would be when we reclaim. One thing you can look at, and this has been helpful to me in the past, is looking at ATR. So if you look at, let's see, where's ATR here? Right there. So if you look at average true range, what you want is you want, I mean, this goes all the way back to over a year ago, back at the end of 23. We made bank on these calendars back here and through here. So
Mhm.
even though it was generally trending, we made bank on them. Now look at where ATR was. We're moving maybe 40 handles a day aggregate. And, we got a little bit noisy in here, but still traded through it. And, we were 45 handles a day, but it was still okay. It's areas like this where I had problems. Areas like this where I had problems.
Mm.
And not only to the downside, but also the V bottom that we see coming back up again. And
Mhm.
so this would have been fine, even though you had elevated ATR, because this is but as you start to trend down in ATR, that's what you want to look for. You don't want to be tangling with this thing when ATR is heading higher because that's indicating that your realized volatility is starting to get really noisy and it's going to play hell on these trades. So quiet and trending is more of a philosophy about market character where it's stair stepping higher, quietly stair stepping higher. But I think
Mm.
you can even just look at the price movement, and this isn't that bad compared to, if we go back to the beginning of the bear market in 22, you can see that this is clearly there's a huge change, and it started right around here, right around this point in December of 21, where this is where you don't want to be tangling with calendars like that. This is where you want to be. We did really, really well with iron condors during that time.
Mhm.
So you want something which is short vega, not necessarily long vega during this period. So because by the time that you figure out that this thing is moving down, you've already spiked out the implied volatility. It's just the price movement makes it very
Yeah,
difficult.
take a look at the price movement right now, Doc. In the last few minutes you've been speaking, look at the drop in price. We're giving it all back today. Not good. Don't want to see that.
Well, it's coming for the gap.
Yeah.
So this is, and I did buy some puts, and this is one thing that I've been doing lately is Now, it's a little bit late in the day to do something like that, but the characteristic that we're seeing from a corrected market is you'll see a gap up early, you'll see early strength, and about 10:15 or so is usually where this thing happens. Is this is where the big puke, you see a big program sell come into the market, and this is where we'll start to do this type of stuff. So if you're going to see that, be concerned. Don't trust early strength in the day. Don't trust early strength in the day, because we're still in a corrected market. So, and this bears my point, which is like everybody wants this to break higher from right now. We're not done with this correction yet. We're not done with this correction, and in fact, it may even deepen before it's done, because everybody's long right now, guys. Everybody's long. If you want markets to go higher, you have to have that. They climb the wall of worry. Okay, I think we are set. I think we are set for today. So thanks
we got
everybody
all the questions answered and everything.
Yeah. So thanks everybody for spending the time with us today. Dave, do we have any announcements for?
We do. And next week, actually, make sure you stay tuned to this. Start watching. If you're not on our email list, sign up on our website, get on our email list. Doc and I are doing something that we wanted to do for a really long time, and finally, we've spent a few months putting it all together. We're doing a 5-day event every night. We're calling it's a 5-day challenge to replace your income. So we're going to go live for 5 nights straight, teaching you front to back everything we know and have learned 40 plus years combined experience trading the markets to build the perfect and best system for yourself to replace your income and generate that from the market. So, a lot of what we talk about here and everything, but we're going to go in detail into all of it. So be watching for that. We'll start to get in fact, I think the link is up. Let me see if they're finished with it. I'll drop it in if it is. No, they've got a couple other things to do on it. So, but if you guys just stay tuned and make sure you're here next week, watch your email, get in our email list, and we'll start putting that stuff out probably later this week. And guys, it's gonna be pretty awesome. This thing is Doc and I spent a lot of time on this, and gosh, I mean everything you need to know. Like I said, A to Z, to build the perfect, profitable, consistent trading business. We're gonna take it and give it to you. So get ready, be prepared for that. Can't wait to see you guys there. And yeah, I'm excited about this. It starts on January 20th.
2 weeks from now. So thanks everybody.
2 weeks.
Thanks for joining us, whether you're alive or whether you're watching this on a replay. We will see you next week, and stay tuned for details. Thanks everybody. You guys take care.